Hello, everybody. Today, I'm going to look back at the key trends that impacted Toronto's housing market in 2020, the start of the COVID-19 pandemic. My name is John Pisalis from Realosophy Realty. You can catch all my latest writings on Toronto's housing market at movesmartly.com. And if you find this video helpful, please hit the like button and subscribe to this channel to stay up to date on all my latest videos. Now, when we think about how the market responded to this COVID-19 pandemic, it's important to step back and think about what the market looked like before the start of the pandemic. And when we look at the first quarter of 2020, it was an unbelievably competitive market. It had bubble-like symptoms, a lot like what we saw in 2016 and 2017 in the Toronto area. And we can kind of see this by looking at the percentage of properties that were selling for above the owner's asking price. For 2018, 2019, that share was pretty constant, right around 25, 30%. And all of a sudden, in the first quarter, first few months of 2020, that share went up to well over 60%. So over 60% of properties were selling for more than the owner's asking price. This really kind of shows you how competitive the market was in those first few months of 2020. And then, of course, we got a provincial lockdown in mid-March, and we didn't really see the effects of this kick in until around April. In April, sales in the GTA were down 67% over last year. In May, they were down 54% over last year. The market basically froze for 2 months. Buyers were really reluctant to go out and look at properties, very few showings on properties. Sellers had a hard time selling their homes because everything was locked down, and there was a lot of economic uncertainty. And that, of course, is when all the big banks and CMHCs came up with their forecasts. Most forecasts, interestingly enough, were expecting prices to stay relatively balanced, maybe see a slight single-digit decline in prices. TD was the most optimistic, expecting prices to go up 8%, while CMHC, Canada's housing regulator, predicted that prices would tumble 9 to 18%. So they were the most pessimistic. And then what happened? June, the market gradually started to rebound. And then by July, the housing market really was on fire again. I mean, we really kind of got back to sort of this unbelievably heated market that we had in the first quarter. It caught most people by surprise. And largely because at the time, there's still a lot of economic uncertainty. There were hundreds of thousands of Canadians. More than 12% of outstanding mortgages were in deferral. So people had stopped making their payments. And double-digit unemployment in Canada. So this is not the economic backdrop for a booming housing market, and yet the housing market was booming. And when we look back, it started booming for probably, I'd say, 3 key trends. I mean, the first is when we look at the unemployment trends, the people who were most impacted and lost their jobs were disproportionately people in the lower income brackets. So a lot of the people who were looking at buying homes for homeowners were not impacted as much. So that's the first trend. The second trend is that there was a lot of pent-up demand. Again, when we look back at how competitive the market was in the first quarter, all of those buyers didn't disappear. They just hit pause, started working from home. We're still eager to buy a house, and we're just waiting for the right time to jump back into the market. So by the time the summer hit, it was a lot like the spring market kind of got delayed and pushed back 2 months. So the sales we're seeing in July and August were probably more similar to what we might expect to see in April, May, or June. So the year-over-year comparisons were probably not the most accurate because of the way the market froze in April and May, but we did see a big pent-up demand heading into the summer months. And I'd say the last key thing is that COVID really created a lot of new demand, and we saw that in sort of what we call this urban exodus that many of you may have heard about. A lot of people sort of who had downtown homes or condos wanting to move to the outer suburbs, have a little bit more space at home, have a more outdoor space. So this, in fact, actually created more demand that wasn't even there prior to COVID. So those are the key things that led sort of the rebound. The next key trend impacting the housing market was the decline in rents. So not surprising when we think about how renters were disproportionately, or people in the lower income bracket were impacted far more than higher income earners. I mean, this, of course, is going to impact renters more than homeowners. So when we see those trends, it's not surprising it's going to impact the rental market. Rents in the downtown core ended the year down about 20% over last year. So the downtown core's rental market got hit the hardest. And a lot of this is just driven by people moving out of their units. I mean, if you're living downtown originally, I mean, the key driver And the desire to live downtown was walking to work and having a great nightlife. And if you're not walking to work and there's no nightlife, there wasn't a lot keeping people in their units. So a lot of people left the downtown core, and we saw huge vacancy and big decline in rents. And that's kind of the second big trend, the other big trend that was impacting the market. That was sort of the downtown core that was hit a lot harder than the 905 regions. Now, the other interesting trend that kind of started at the end of the year is that the condo market started to rebound. The last 6 weeks of the year, and in particular December, we saw a 75% increase in condo sales. And a lot of this was driven by investors jumping back into the market. Condo prices were down about 10% in the downtown core. Investors saw that as an opportunity to jump back into the market to take advantage of some decline in prices. And that really resulted in a big demand increase. And we'll see if that continues into 2021. And the last trend that's worth noting is fears of this deferral cliff. As I mentioned, hundreds of thousands of Canadians at the height of the pandemic stopped making their mortgage payments. Banks were fine with this. They were fine with homeowners deferring their payments for up to 6 months. But the fear was that come October, November, when people started needing to make their payments again, would they be able to? This is kind of the deferral cliff that, all of a sudden, all of these hundreds of thousands of people would have to start making payments again. The fear was, would they be able to? And it turns out they were. A lot of the banks are reporting that people just went back on to making their payments. A lot of people who ended up deferring their mortgages in the end didn't really need to. They did to for precautionary reasons. So the deferral cliff, which is one of the big concerns most people had in the industry, ended up being a non-issue so far. We might see some pressure from some households that are overstretched, but as a whole, it's not a big risk of massive defaults the way some people were worried at the beginning of the pandemic. Those are the key trends for 2020. So we've ended the year with a booming market, both in condos and in houses, interestingly enough, in December. My next video, I'm going to talk about some of the trends I'm looking into for 2021 that might be impacting the market for houses and condos for the year ahead. Stay tuned.